Imagine buying your dream home for $6.7 million, only to sell it 3 years later for $5 million. That's a $1.7 million gone. That's the story of this Etobicoke home after 4 failed attempts to sell. And they're not alone. Across Ontario, more homeowners are facing brutal financial losses. Homes that once seemed like a guaranteed win are now selling for less than their owners paid. From Oakville to Toronto, condos and houses alike are being dumped at a loss. But why? For years, Ontario's housing market was fueled by one simple belief: home prices will always go up. This wasn't just wishful thinking. From 2003 to 2023, the average Canadian home price surged by 227%, climbing from $207,510 to an average of $678,282. Prices never seemed to slow down, and the fear of being permanently priced out forever forced buyers to stretch their finances to the limit. But it wasn't just families trying to secure a home. Investors flooded the market. They saw real estate not as housing, but as a fast and easy way to make money. Investors now own 23.7% of Ontario homes, driving up demand and squeezing out regular buyers. But nothing reshaped Ontario's housing market quite like the pandemic.
Effective immediately, Ontario is declaring a state of emergency.
With remote work on the rise, city dwellers realized they no longer needed to live near their jobs.
But there's one sector that has surprised many and come out strong: Canadian real estate.
They fled to the suburbs, driving up prices in Guelph, London, Barrie, Windsor, and other smaller cities as demand exploded. Many simply drove until they could afford, but the work from anywhere dream didn't last. As of 2024, only 13.5% of Canadians still work fully remotely, while 11.4% have hybrid schedules. Employers are calling workers back to the office, and many of those who moved far away are now stuck with brutal commutes they never planned for. For some, what was once a 45-minute drive to Toronto now takes over 2.5 hours. Suddenly, the extra space and lower home prices don't seem worth it. Some are even choosing to move back closer to the city.
Toronto transit riders will spend 1 year and 7 months riding transit throughout their lifetime.
This shift is reversing the demand that pushed suburban and rural prices to record highs. And for the first time in years, some sellers are now facing losses. For nearly a decade, the Bank of Canada kept
interest rates are at historic lows, Glenn,
making mortgages incredibly cheap. Buyers weren't just purchasing homes based on what they could afford, they were buying based on what the bank would lend them. From 2020 to 2021, buyers locked in ultra-low mortgages, often between 1% and 2%. With these rates, $1 million mortgage only cost $4,000 a month. People assumed rates would stay low forever. They didn't. By March 2022, in response to rising inflation, the Bank of Canada started hiking rates aggressively. Within 2 years, mortgage rates quadrupled, with fixed rates now hovering between 4.1% and 4.6%. For homeowners with mortgages up for renewal by 2026, payments could increase by 20 to 40%. For a homeowner with a $1 million mortgage at 1.5% in 2021, the monthly payment would have been around $4,000. If their payments increased by 40% upon renewal, that means they are now paying $5,600 per month, a $1,600 increase. Most homeowners never heard of the term trigger rate until they hit it. 75% of variable rate mortgage holders with fixed payments had their loans hit this breaking point by 2023. So what is a trigger rate? When rates go up, more of your mortgage payments get eaten up by interest. At the trigger rate, your entire payment covers only the interest, not the loan itself, and it's still not enough. When this happens, your mortgage balance starts growing instead of shrinking, a nightmare scenario called negative amortization. And when borrowers finally renew in 2025 or 2026, their lenders will demand a correction. Homeowners now face 3 choices: pay more, extend their loan, or sell at a loss. For many, these options are all bad. The situation is already forcing some homeowners to sell, unable to absorb the financial hit. While existing homeowners are struggling, new buyers can't afford to enter the market. Higher borrowing costs mean fewer people qualify for mortgages at all. With less competition for homes, sellers can't demand the high prices they once could. This is leading to a market slowdown, with some selling below their purchase price. Home sales in Toronto dropped 18.7% in December, a sharp decline that signals just how much the market has changed. In Brampton, a home that was purchased for $1.8 million recently sold for just $1.28 million, $520,000 loss. Across the Greater Toronto Area, an estimated 70% of homes are now selling below their list price. One of the biggest reasons for these losses is the wave of mortgage renewals hitting the market. Many homeowners who purchased during the boom locked in ultra-low interest rates.
To 0.25%.
Now, as their fixed rate periods end, they're being forced to renew at much higher rates. Many simply cannot afford to hold on to their properties at these new rates. Selling at a loss becomes the only option. And then there's the condo market, where the cracks are getting bigger. For years, small-scale investors fueled the pre-construction boom, lining up to buy condos before they were even built. The assumption was simple. Demand for rentals would always remain strong, mortgage payments would remain low, and condo values would rise steadily, ensuring a profit. But that strategy is collapsing. New condo sales in Toronto fell by 64% in 2024. Among the 1,829 condo units that launched for pre-sale in the last quarter of 2024, only 10% found buyers, a dramatic drop from the 52% sales rate typical over the last decade. The number of unsold pre-construction condos in development has now hit a record high, 24,277 units. Rising interest rates have made it significantly more expensive to hold on to properties, while rents have not increased enough to cover the higher mortgage payments. Selling before closing, sometimes at a loss, is the only way out. But it's not just pre-construction condos struggling. Developers racing to complete projects added a record 29,800 finished condo units to the market in 2024. This sudden flood of new inventory has driven resale prices down even further, and the ripple effects of this condo downturn will not be contained to just that segment of the market. Condo values typically set the floor for real estate prices in many urban areas. If condo prices continue to fall, it will drag down home values across Ontario. Prices were never meant to rise indefinitely. Now, as borrowing becomes more expensive and demand slows, sellers are being forced to face the reality. That's why homes are starting to sell for a loss.